Hello, everyone. It's Mike Schoonover with the 812 Living Group and host of the 812 and You blog. Hey, listen, today is going to be an important topic that we're talking about. No offense to my guest. We are going to be talking about insurance, but before you glaze over, we're going to share some topics with you that are really important, some big changes. And if you listen through, our guest is going to give you some tips on saving you some money and some possible headaches for you and your home. So today I have with me Daniel Dieterlen with Innovators Insurance. He's owner and agent. Daniel, thanks for joining us today.
Hey, thanks for having me, Mike. Appreciate it.
Yeah. So let's dive right in. Hey, one of a big change that's coming, 50 years in the making, right? It's something that the National Flood Insurance Program, or NFIP, has been working on for quite some time. They're calling it Risk 2.0. So tell us what you know about it, and what is this upcoming change all about?
And to your point about insurance being something that kind of makes your eyes glaze over, it's one of those things that it's not super exciting, but when you need it, you're like, oh, I hope I have what I need.
Yeah, absolutely.
So it is important to make sure. So this upcoming change you mentioned is 50 years in the making. So basically, the ratings have not changed. The way that they rate the insurance for flood to determine the premium has not changed in 50 years. And fun stat here. So the past 50 years, they've collected 60 billion in NFIP premiums, but they paid out 96 billion in costs. So about $36 billion off. So what they are trying to do is to correct this and look at other factors. Before it was, we're just going to look at the base flood elevation and say, if this is the base flood, how much lower are you? And we're going to determine your rate off of that. So what they're doing is they're adding more factors. They're adding, what is the value of your home? Assuming that if it's a higher value home, it's going to cost more to repair it. So that person is going to pay more. They're looking at your proximity. They're not just looking at, the base flood. They're looking at other potential risk for flood for your particular home. So it should be one that kind of adjusts. You'll see adjustments. I've got some, it varies a little bit by state. In Indiana, about 46% of people should see a decrease, small decrease. 47% will see a small increase. And then there's 7% who are going to see a pretty significant increase. In Kentucky, it kind of skews the other way. There's going to be more that have a increase than that have a decrease. But just going to be some changes there. And it begins October 1st. So see that change.
So couple of thoughts there. One, we're in a river town, southern Indiana, right? So we're going to have some high risk areas. But just to give this broad stroke picture, the flood insurance program, if you are required to have flood insurance, that insurance is I think the number is 95% of the people get their flood insurance through the government run program. And they have spent more on paying out claims than they have taken in premium. So there's this imbalance there. We're seeing where they have rates where not the high risk properties weren't paying what they're calling their fair share. And now they're saying we're going to adjust that to make sure that if you're more prone to flooding, you're going to pay a higher amount, right?
That's correct.
Yeah. Okay. So they're trying to shore up this program. I think Congress bailed them out a few years ago with a big loan after one of the major hurricanes. But now they're saying, hey, in order to do this, keep this program afloat, we've got to change the way that we charge people. Right. So you're anticipating some change, and you talked about the numbers there. Homeowners who have flood insurance now, what are their options? I mean, do they have options if their rates raise?
Yeah. So there's a few different options. So FEMA, people will say that, well, I've got to get the flood insurance, and it might depend on the type of loan. They may require it to be NFIP, but basically there's two different types. So there's the NFIP, National Flood Insurance Program, which is a subsidized government-run program, and then there is also private flood insurance. And I will say that is something where we have invested, and we have a few different options with that. It makes a lot of sense for some people who are, maybe not right by the river, but if somebody is in a flood zone and they need to carry the flood insurance, it's a lot of times a much more affordable option for them. But again, and it's just as good, if not better, as far as coverage wise. So that is a product that we really like. And that's one that we try to help out people who are going through the home buying process, and that maybe becomes a hiccup or an obstacle. So that's something where we've seen a need and we've tried to fill that by getting really good at it. So
Yeah.
that is another option.
Well, and that's one of the reasons why I had you on today, Daniel, is a lot of the big chain insurance providers. I don't want to name any names, and it's not that they're, bad. It's just that they have chosen to just let flood insurance go through the NFIP. They don't want to touch the private stuff. Whereas your company has decided, look, we're interested in that space. And I think this change is going to probably bring more competition your way. But for now, if someone gets that updated flood quote starting October 1st, they can come to Innovators and you guys can quote them a private policy. Is that correct?
That's correct.
Yeah.
Correct.
Yeah. Okay. So now we have some options for people who are in this flood category. So any other thoughts or any other things people need to know about these flood insurance changes?
I will say that there's a couple of things that limit the amount of change. So there won't be more than an 18% increase each year, even in the ones that. So if your premium is set to go up $3,000, and it's currently it's not going to go up more than 18% each year. Okay. So that'll kind of help a little bit with the sticker shock. But that is one thing that I did say. And then there's another thing, that if you are in a home that has the repeat damage, or if it floods frequently, or if you're in a home that has major damage, so about 50% of your home value, there is a program already in the NFIP where you can potentially get some money for making not improvements, but making it less flood prone. So that is a good option for somebody who is, right on the river and they love the river life. But yeah, I would say for people who maybe are in a little bit less of a high risk, definitely you might be pleasantly surprised if you see a private flood quote. We've seen those, and I don't want to give exact, but we've seen those sometimes half the premium of what the NFIP policy is. Yeah. And just being able to show options. And that's kind of our whole thing, not just with flood, but everything is like, hey, let's look at some different options and help find the best one. So
yeah. Well, options are always good. And, for someone listening that's saying, hey, I'm not in a floodplain, so this doesn't impact me. Yeah. The argument there is if the government has to keep bailing out the National Flood Program, those are taxpayer dollars. So it is impacting you in some way. So hopefully these changes will help kind of balance the budget, if you will, on the amount paid in and paid out. Daniel, while I've got you here, I wanted to ask you, so on the real estate side, I've been seeing because of the pandemic, people are staying home more. So they're adding offices inside of their homes. They're adding rooms. They're adding, exercise equipment. They're adding pools. So we're seeing a lot of home improvements during this time, just because people are spending more time at home. I wanted to ask you, from a homeowner's insurance standpoint, what do people need to be taken into account there?
Yeah. Well, whenever they do these ads, it is a good idea to talk to your agent. Maybe call them for a policy review. That's something that we try to proactively do. Say, hey, once a year, it's a good idea for us to kind of touch base and make sure, because things change, and we've seen the value of homes go up and inflation. A couple of things that could be potentially a good option to maybe counter that. Not to say you shouldn't do the review, but also there's some things you can do for your home policy. So if my home replacement cost was, say, $400,000 the last time I did my home insurance, 5 years ago, you might find that if something happened, you would be underinsured. So there's a few things you can do, like an additional replacement cost. So in the event of a total loss, there's an additional amount of coverage. And that's anywhere you can do from 25% to what we have a few companies that will do guaranteed replacement cost.
Okay.
So that is a huge peace of mind to know that, all right, if my home is leveled and they're rebuilding it and they run out of money and I don't have a roof on yet, that my policy will pay to get me back to where I was.
Yeah.
That's a huge thing, but definitely with the pool, you want to let your insurance agent know, address your liability limits. Potentially, you might need an umbrella would be a good idea for that one, but just to make sure that if something happens that you've got what you need in place.
Yeah.
And there's coverage for that. So
yeah,
I would say a relationship. If you got a good relationship with your agent, that's a great thing.
Yeah. So not only do we have home additions and improvements increasing value, certainly over the last 5 years, we've seen property values rise. So if it's been a couple of years since you've met with your agent, highly encourage you to do that to make sure you've got the coverage that you need in place. Daniel, I'm sure you could help them out with that. I know you can help them out with this private insurance on the flood when it's coming up. Where can people find you and get a hold of you?
Yeah. So our website is innovatorsinsurance.com. You can email me. Best way to get a hold of it, this will get to somebody now, is my team at innovatorins.com, or my name, Daniel, at innovatorins.com. Our office, we're open from 8:30 to 5. It's 812-252-4419. It's our website. You can check us out, see what we're about, and you'll see some testimonials. But we're happy to help any way we can.
Okay. I'm gonna put those that contact information in the blog post and in the video notes. I'm also going to link to first. There's a company, and their name is escaping me right now, but they have a calculator that they ran where you can go on and kind of see their thought process, their algorithm on what they think your risk rating will be when these new ratings come out. And I'm going to link to the FEMA site talking about these changes. So we'll have all that information on there. We'll get your contact information in there. But thank you for joining us today. Not a lot of people talking about this changes, but being in a river community, I think it's important. It's going to impact some of our clients. So thanks for joining us today.
Hey, thanks for having me, Mike. I appreciate it.
Hey, if you'd like to have updates on Southern Indiana events, news, and real estate information you can use delivered directly to your email inbox, visit us at 812living.com/blog. That's 812living.com/blog, and sign up for alerts.